All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners, and during this webcast, we welcome Electra Battery Materials, ticker symbol of ELBMF on the OTCQX and ELBM on the TSXV Venture, and the company's Chief Executive Officer, Mr. Trent Mell. Today, I've asked the company to run through the slide presentation, and then at the end, we'll engage in a short fireside chat-like Q&A session. I just want to remind all the listeners and viewers here that before I do turn it over to Trent, management is going to be available for one-on-one meetings later this week. If you have not already signed up, you can send me an email. That's Blum, B-L-U-M, at lythampartners.com, or you can visit the website at lythampartners.com/virtual. Click on the one-on-one meeting request button, and we will look to get you taken care of. So with that said, let me turn the presentation over to Trent Mell, Chief Executive Officer. Trent, the floor is yours.
All right, thank you, Robert, and thanks everybody for joining in. Let me share my screen here. We can go through a little bit about Electra and where we are as a company. So some of you that maybe have been following us will know that we rebranded in November. Previously, first Cobalt, now Electra. And as you'll see in this presentation, this really has to do with a broadening of our vision as we de-risked what is now phase one of our business plan. And frankly, just taking advantage of a really accelerating investment climate in the North American supply chain. All right, so there will, of course, be some forward-looking statements in this presentation. And now as I go forward here, first slide really just tries to provide you with a timeline of where we are going as a corporation. And so I mentioned phase one of our existence here. That's the 2022. So after 5 years of exploring for mineral deposits and then acquiring a refinery in Canada and advancing that, we are on the doorstep of first cash flow. So it is now April. By December, we're going to be commissioning our refinery north of Toronto to produce North America's only source of battery-grade cobalt for electric vehicle batteries. So exciting moment. And while we're doing that, we're already working on phase two. We've been working on battery recycling, a hot topic in the North American market for about a year now. We're going to be running a demonstration plant right there on site as we're building up the cobalt plant. So that'll happen this summer. And then in 2023, we'd expect to start commercializing circuits of that what we call phase two of our plan. Thereafter, it starts to become some bigger lifts. Nickel content in the cathode in the batteries is much greater than cobalt, and so in order for us to build an integrated industrial complex, a battery materials park as we call it, we're going to need a fairly sizable nickel sulfate refining facility on our site, which is going to require North American feedstocks and quite a bit of capital and probably some partnerships. And then thereafter, once you've got these three components together, the fourth phase. And this would be with an existing partner, existing producer. This is the first stage of the battery making process where you take your cobalt, nickel, and your manganese, which we would import, along with some recycled content, and you make that first step of the battery, the precursor manufacturing, as we call it, which in turn goes into the cathode and into the battery. So in tandem with all that, we've got a number of growth opportunities. We're finding the interest in our team, and our story has grown. The interest now that we've got all these announcements of not just the electric vehicle plants, but the battery plants starting to be announced. Well, they have been announced over the last 18 months, really 24 months, more recently on the chemical side. Just a lot of growth opportunities. So you might see us tip our hand a little bit in terms of what we're going to be doing. And at the bottom, all the products that we're targeting. And I'll get into that here in a moment. So that's the high level overview. If you look at the environment that we're targeting, we do have an eye on Europe. But over the next couple of years, it really is focused on North America. And you can see just some of the players that we'd be talking to, some of the people that are making the investments here in North America, and then where we're situated. So if you think of the supply chain today, particularly in the chemical space where we sit, that's Korea, Japan, and China. And here we are on the doorstep of all these facilities. So we're very well situated to service these partners from a supply chain security perspective. We're obviously a lot closer to our key markets, I guess, if we look at Europe. We have all of our capital in place to get ourselves to production at the end of the year. And as you're going to see, we've got a really good ESG story by virtue of where we're located, our source of power, and the flow sheet, the actual facility that we're going to be operating from. A word on the leadership team. So across the top, some of the senior leadership, pretty much everybody does here comes at a larger company. So Regan Watts from the corporate world but everybody else comes out of large mining companies. Myself, Barrick Gold and Sherritt, worked in the palladium market. I did work as a banker for a short time. Mark Trevisial, key guy building the project, came out of Falconbridge, which is now Glencore, and so on across the team. And the team gets a lot deeper beyond what you see here. Board a little bit more diverse. The first couple of gentlemen are from the industry. We got Susan Yathu-Kumar, an ESG specialist, former Governor Butch Otter, governor of Idaho, and then Henrik Fisker, who of course is building his own EV company, remains no longer on the board, but as a special advisor to myself and the rest of the team. So this is the core concept. When you look at who we are, we got two key assets. We got the Battery Materials Park in Ontario, and then we've got our Idaho mineral project, which I will finish up on once I've gone through this. And so I walked you through the investments that have been made over the last 18 months, the electric vehicle plants, the cell plants, the battery plants that are starting to be put in place. And 2025 is going to be the big year where the onshoring of most of the supply chain you see here has occurred. In the last month or two, we've seen announcements, two announcements in the province of Quebec for CAM, CAM at the top there. That's cathode active material. So that's the material you put into the cathode portion of the cell for the battery. And then everything before that in the box is where that's the pond that we're in, from extraction in Idaho, recycling I talked about, refining I talked about, cobalt and nickel, and then the precursor partner that would come in and take it from us and do that next step. And then the reason you want that all integrated, particularly refining, recycling, and PCAM, is you save a lot of money from an operating perspective, capital perspective, and it does lower your overall carbon footprint. And I'll come back to that in a minute. And so you can see the space here below where Electra sits and where some of the supply chain players sit, and how we really do expect to play an important role at filling a gap in the upstream that exists in North America today, and replacing that Asian-centric chemicals market that exists today. So here's a picture of the plant as it existed last summer. We're building a second facility right next to it of equal size, and I should probably update this with some construction photos, so apologies for that. But I think what I'm trying to really get across here is we're not, this is not a conceptual plan here. This is a facility that operated for 10 years. And you see, excuse me, no smokestacks coming out of this plant. This is a hydrometallurgical facility. So it's chemistry. You're taking material, you're leaching it into a solution, and then you're extracting the valuable components for it. And that's whether it's nickel, cobalt, or recycled material, it's the same thing. It's a very, very clean process. We did a life cycle assessment that showed that our greenhouse gases were going to be 50% lower than our peers. Part of that is process. Part of that is just that we've got a hydroelectric grid system that's entirely run by hydropower. So it's renewable water that's generating our power, unlike the coal plants that you see in that part of the world. And the nature of this facility, you'll see on the inside, it's a lot of leach tanks and filtration circuits. And so as we seek to grow initially 5,000 tons, almost 5% of the market, then 6,500 tons of cobalt, you can keep building this out in a modular fashion. And that's a theme that's going to be particularly important in the battery market, because the battery market today is relatively small, but it's going to be massive. And so rather than build it all out at once, we've got an ability to go there sequentially with all the land that you see around you in this picture. And I should add, given that it's operated, we've got the permits, we've got the water line, we've got obviously the roads and the power lines, and a huge bodies of water around us. And so ideally located for the development of an industrial park in a part of Canada that is rich in history of mining and mineral processing, with contractors and reagents, rail, all the things you want to build this out. All right, so phase one. This is really what I expect our company to get re-rated on this year. We're moving from pre-cash flow to cash flow with the commissioning commencing in December. And why this is important strategically for the industry is, if you look at the chart on the right here, everybody but one above us is a China-based refinery. You've got Kokkola in Finland, which is a facility owned by Umicore, which plays an important role. But beyond that, you're really going to China for your cobalt. So there's geopolitics, there's supply chain concerns like Shanghai being shut as we speak. We've had issues there with the port, and then the carbon footprint perspective as well, ESG and all kinds of other issues. So we find ourselves in a unique position. If you're, pick an automaker, Stellantis, looking to buy your cobalt, you've got Electra or you've got China. And as you start to do the onshoring, the solution becomes fairly obvious. And of course, we're not doing this alone. The material that we're getting, there are very few options for cobalt in the world today. We're getting our material from the DRC, like China. So we've got the same dilemma, if you will, in the short term, but we rely on pretty much a single jurisdiction for all of our batteries around the world. But instead of sending the material to China, we're bringing it to North America. So Glencore and IXM are going to be providing us the material from 3 of the best run operations in the DRC. And then on the other side, we've got Stratton Metals as a trading partner to help us facilitate early trades or surplus trades, all while we chase OEM and battery maker contracts. Discussions are well at hand, and I'd expect to have some news on that through the course of the year as we move forward. So that's the phase 1. I'll talk a little bit about cash flow. Phase 2 is the battery recycling. And so very quickly, when you think of batteries, there really is 2 distinct steps. First is when the battery comes out of the phone or the car or the portable drill. You've got to collect it, discharge it. You've got to then remove all the plastics and the casings, and then you crush it into a material that we call a black mass. And this is where the value, to me, lies for us. A lot of people do that first step, but 90% of the black mass produced in North America today is going to one party. It's going to Glencore and their smelter in Sudbury using a pyrometallurgical process, which is that area just above here, the box and the lower portion, where you're using a heat-based treatment. So, there's a bigger greenhouse gas footprint. Recoveries aren't as good. Ours, as I mentioned earlier, is hydrometallurgical. And because it's built and has operated and will operate again here very soon, we're able to have an impact in this market fairly quickly. So you'll see more plans on that this summer as we do a demonstration plant. But the idea would be to try to commercialize circuits of that into 2023. And what you see in this picture here, this is our demonstration plant. This is the existing inside circuitry flow sheet of the refinery as it is. Too small for our cobalt plant, but really well sized actually for what we plan to do this summer on the recycling. So stay tuned. It's a small cost, $3 million or less, because we've got everything in place. And we've been working on testing and flow sheets for about 1.5 years, and we've got a great team to pull that off. And sources, as I mentioned, the upstream piece, a lot of players doing it. We've got a list. I think we're up to 30 players now, 30 people, battery shredders, if you want to call them that are interested in supplying us with material from around the world. Although realistically, I think we're going to get all the material we need initially from the U.S. anyway, with Marubeni as a strategic partner in Japan. All right, phase 3. Now we're getting a little bit further in time here. If we do 2022 to commission our plant and into early 2023, then 23 on recycling. Now we're looking at 2024 to 2025 for phases 3 and phases 4. So this is a big nickel sulfate plant. We are now doing a study with Glencore and Talon in Minnesota to see what their feed would look like through a sulfate plant on our facility. Government of Canada and Government of Ontario are participating as well. And this is a really important step in the battery strategy, because you're going to have 10 times more nickel in North American vehicle batteries as you would cobalt. So a big capex raise, likely to be done in partnership. But this map really does show you that with the squeeze on in nickel around the world and people looking to Indonesia, which has a massive carbon footprint relative to North American deposits, just style of mineralization, processing, and power sources, there's a lot we can do here on this continent, but it is going to require some new mine development. And by virtue of having a refinery here in North America, the hurdle rate to deploy the capital and develop these assets just gets lower. So we can enable one another as we move forward. And then lastly, the precursor. So as I mentioned, the first step of making the battery, take all the materials, you combine them, and then eventually it'll find its way into the cathode. I got a couple of pictures of 2 industrial parks in China and in Finland. These are more mature parks, but the idea here is if you can do these steps that you see in this box here, this battery materials park, refining, precursor, and recycling together, you're saving on capital costs and you're saving on operating costs. Instead of making a final product, cobalt in solution, then drying it into a crystal form, putting it into a bag and shipping it to a PCAM plant where they're only going to dissolve it, you keep your product in solution, you pipe it to the plant next door. So you're saving on capital equipment you don't need, your operating costs come down, and your carbon footprint comes down because you're not transporting this through all 4 corners of the globe. So really excited about this. This is going to be a partner. There are a lot of great PCAM partners, Korea, Japan, and Europe that we are speaking to. None of them are part of the study yet. That could change, but this will be the last stage of the footprint growth. And just a quick point on the onshoring. I mentioned pulling material from all over the world. The carbon footprint or the CO2s of just a container of material coming from China to the US is about 2.7 tons for each and every container. And so bringing that material from wherever it may be, in the case of, this is really a cobalt. So you're taking cobalt now from the DRC Canada into the US, as opposed to DRC China. We're 1.5 tons of CO2. So you're cutting that in half. It only gets better if you got a domestic supply of nickel. All right, Iron Creek, I don't want to take too much time here. I leave time for questions. Iron Creek, mineral asset, copper, cobalt, state of Idaho, Idaho Cobalt Belt. A unique asset worldwide because it's primary cobalt. We've got an asset there called Iron Creek, which we have been working on. It's been a little bit, I guess, neglected might be a fair statement because we've deployed so much capital towards the refinery, but sitting on almost 5 million tons of high-grade cobalt material. The view here is that we could keep drilling it to double it and develop this and have this into a domestic American source of cobalt, which would be extremely valuable within about 5 years' time. So I won't spend too much time on it, but I think the takeaway here, as we keep drilling, and you can see these orange dots where we drilled last year, just getting the assays in now, mineralization is looking good. It does look like it keeps extending. So I'm confident we can keep growing this. And think of this as a mine of the future. This is a low footprint. This is underground mining, high grade, not a big open pit. So the ESG credentials here as well should be favorable. And within the Idaho Cobalt Belt, you can see here our property package, quite large, with Iron Creek being the solid red. And even in the proximate area, we've got a number of targets, including Ruby, which we're hoping to drill this year, which could yield similar styles of mineralization and maybe another Iron Creek somewhere in the footprint. All right, so what are we worth? If you look at how we're trading today, I would argue we're trading at about 3 or 4 times our future-looking EBITDA. And if you look at the ramp up of production, I said 5,000 going to 6,500. This is how it looks over a calendar year basis, from 43 going to 65. And what that means in terms of EBITDA in US millions, 24 going up to 40. So if you look at what that means for us, if we were to get the re-rate of some of our chemical peers, it could be a double or a triple from where we are today comfortably. And if you want to take lithium as a comp, then it gets even better. So look, up to us to de-risk it, but I would just say as an investor or prospective investor, this is the time perhaps to pay attention and to maybe make a call, because production is just around the corner, and so far everything is looking great, on time, on budget. I will say here, lastly, before I end the presentation, in addition to what I've just shown you, that's the solid blues. We haven't given any forecast yet on production profile and revenue from recycling, which will come sooner than later, let alone nickel and PCAM as well. So we've got a lot of growth prospects ahead of us. We're focused on executing on the cobalt plant. And at this point, Robert, maybe I'll pause and ask you if you have any questions for me.
All right, perfect. Sounds good. I think we have time for just a couple here. Maybe let's just start out from a macro perspective. Some of the events that have taken place in Ukraine here of late, what impact is that having on the market? And then, bring that back full circle to the impact or the possible impact here for Electra.
Yeah, there's a few lessons there, right? I mean, under the previous White House administration, we talked about China and critical minerals and the importance of a domestic supply. And we're seeing that under the current administration as well. Although I'd say it's not just China, it's also industrial policy, right? And then trying to strengthen our auto sector. China is just a reminder of geopolitics, right? It's not just China, right? It could be resource nationalism in Indonesia, big source of nickel, or the war in the Ukraine. I mean, Russia is the second largest producer of nickel, the top producer of class 1 nickel, so the high quality stuff. It's caused people to scramble. There are players in Europe that are reliant on Russian nickel. They can no longer buy that nickel. And it drives home the importance of, if we want to be masters of our own destiny, we really got to do stuff here domestically. And to my point earlier, Robert, if we can build that nickel sulfate refinery in our backyard, all of the nickel assets whether it be in the Sudbury Belt or elsewhere on the continent, it gets easier to put them into production because they no longer need to incorporate that stage of development into their CapEx plans.
All right. With the various sort of operations that you have or looking to sort of develop here, how unique is your model within the industry here?
Yeah, I think what makes us unique is that we got our hands on a permitted facility, and we were very early to the party, right? We're making cobalt in 2023. The onshoring process isn't going to be completed until 2025, which is not a problem. We can ship to Korea or Europe in the short term. So I expect the battery parks that we've conceived of, you're now starting to see Quebec do the same thing. We'll probably have 3 or 4 of these on the continent before we're done. But as a startup, to be there first just puts you in an enviable position just from the operational experience. So if we're going to have a second industrial park, maybe it's us. Maybe it's us going to Southern US or expanding into Quebec. It's something that's needed. You look at the 15 automakers that are going to be making cars here, and you got one provider of cobalt. It puts you in a really good position, but especially with us on the recycle market, to bring the recycling into it as well, we can produce at scale a lot of volume, a lot of material that includes that recycling component, so it makes it even greener than it already is.
Okay. ESG investing has been a big topic here of late. I think you guys are certainly a good example as it comes to ESG investing. If you have a message for those investors, what might it be?
Yeah, well, and I think if people are conscious ESG investors, they'll know that a zero emissions vehicle is not zero emission on its way to being put on the road. And so you got to look at where the material is coming from. And so we fully expect to have by far the cleanest cobalt supply on the planet. And part of that is our process. A lot of that has to do with our source of power. And I think you got to look at the supply chain and where it's coming from. Nickel, right? If we were to replicate what we're doing in cobalt and nickel at scale, compare that to Indonesia, the carbon footprint of nickel coming out of Indonesia is going to be anywhere from 3 to 6 times higher than a nickel sulfide project here in North America. So you could do a lot worse than investing in North American producers of battery materials, because we have a way and energy sources that make it better than a lot of these jurisdictions that we're relying on today.
All right, and maybe just in the couple of minutes we have left here, and I think you touched upon the milestones quite well, but maybe just to reiterate them a bit, investors should be looking at what over the next 12 to 18 months or thereabouts?
Well, I think we've got to. I think you'll see us come to the U.S. We've got to seek a full listing here in the U.S. market, and that'll be very soon. That'll make us more liquid and maybe more appealing to a different class of investor. So I think that'll help, at least from our profile. But moving to cash flow is a big milestone, right, for any company, and hence the U.S. listing. I think people that maybe have known us for a while don't focus too much on the cobalt, but there's a lot more under the hood. Recycling is probably coming faster than people think. Expect partnerships. We're not a go it alone kind of team, because I think we'll get there faster and better if we can rely on existing players in the ecosystem. So I think the milestones, I guess, the big one is going to be clearly the production in December, but we're going to have some recycling demo plant activities and results here into the fall, and some partnerships to be announced. Notably, I guess, an OEM partnership to be buying our product.
All right, perfect. Sounds good. Well, let's leave it there. Trent, thank you so much for the time today. Greatly appreciate it. Again, I guess I'll just remind everyone once again, if you'd like to arrange a one-on-one meeting later this week, send me an email or go to the website for additional details. To all the viewers here, we hope you enjoy the conference. And Trent, thank you very much for the time today. Greatly appreciate it.
Thank you, Robert.